You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is a little bit past 1:30 p.m. Central. It is time once again for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com. Coming at you back again from our Chi-Town studio. A little bit later than our normal time because I just came back huffing and puffing from doing a live show down the street at the old SIBO with all of our buddies from the Option Block. I haven't seen those guys live and in person probably since pre-pandemic. So I saw Mark briefly like about a year ago, but other than that, Andrew and Uncle Mike, that was a fun time. So I just got off a live show with them. If you missed that, maybe you don't listen to the Option Block. First off, what are you doing? Then B, go back and check that one out. It was pretty fun. We had a good time, as we always do, whenever a live audience is present. But now it's time to talk a little bit of futures options. Of course, if you guys like what you hear on the on-demand side, all we ask is that you leave some stars, help new people continue to discover the content. Then if you want more in your lives, and who can blame you, we do talk a lot of futures options and in general commodities over there on the pro side. So theoptionsinsider.com/pro. Also crypto, we dovetail into that on this show, and indeed the pro Q&As quite a bit as well. So lots of fun stuff there. We just gave away the Pro Trading Crate for the month of April. Congratulations to our pro member, JLS, who took home that prize. Another one in the offing for May. So get active in the pro for the month of May. You can get your name in the hat as we keep on rolling into the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we break down what's lighting it up to the light side, a.k.a. the upside, and to the dark side over there at CME Group this week. And looking at the chart here, listeners, it looks pretty evenly split. This is the most evenly split week we've had in quite some time. Pretty close to 50-50 green versus blue on the week here. So we have an embarrassment of riches in both directions to choose from this week. Of course, an interesting week coming off the heels of the Fed. They always drive some volatility, drive some action. That's exactly what we're seeing in the broad equity space right now. A sell-off as well as vol coming roaring back to life after flirting with kissing a 15 handle out there in VIX on Friday, now roaring back over a 20 handle. So I guess we just needed VIX to drop. We were saying that last year, right, listeners? What's wrong with equity vol? Why is it broken? Why is it so muted? It's because we were already hanging out in the mostly 20s to sometimes low 30s range, and you're already seeing a lot of move already baked in there. Now that we're back in a 15, yeah, we could pop 4 or 5 handles in a day. So intriguing stuff. We'll get to all that fun in a bit. First, to the movers and shakers we go. Since it's me holding down the fort this week, I get to choose. And, I'll go light side again. I'm going to throw you a curveball. To the light side we go. Number 5, we're starting things off in the metals, getting precious with gold up 2.77%. Number 4, back to the beans, soybean oil in particular, up 3.31%. Number 3, right back to the metals. It is silver, up 4.13%. Be a good day to chat with Uncle Mike. I was just talking with him a little while ago. I know he's doing another presentation right now as we speak, so he'd be excited by all this precious stuff. Maybe we'll do a little metals in his honor on the show today. Number 2, back to the ags. It's KC Wheat, up 4.31%. And number 1 to the light side, it's the old Eurodollar, up 7.02%. It is Fed week after all. And again, Eurodollar, not exactly a product I know most of you watch or really even trade. It would be the 3-month SOFR if we were going to hang out in that direction. Or for a lot of you, I think more hanging out on the 10-year on the rate side. So if we head out to the rates, that's probably where we'll head. But now we're going to head to the dark side first. Number 5 to the dark side, off to energy. It's Brent, off 6.25%. Number 4, still staying in energy. RBOB, off 6.43%. Number 3, still in energy. I'm seeing a bit of a pattern here. It's WTI, off 7.83%. Number 2, back to the ags ever so briefly. It's rough rice, off 9.41%. It was number 4 in the other direction last week, up a little over 1%. And then our number 1 dark side mover, listeners, it's nat gas, off 9.46%. So they are once again coming for nat gas. So a lot of energy and a smattering of ags on the dark side. And some more ags, a little bit of rates, and some metals to the light side. And since we haven't talked about metals in a while, I was just chatting with our buddy, Mr. Uncle Mike. I think we'll kick things off in the metals this week.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the shiny stuff, the wonderful world of metals. Head on over to that drop down. You can find it at cmegroup.com/TWIFO. Once you're there, go into that drop down. Go all the way from ags at the top, all the way down to the second from the bottom to metals. And we're going to hang out in precious. We're going to kick things off in the big dog, which is gold. Obviously, a busy week for gold. Fed week, always driving a little bit of interest in the shiny stuff, and that is the case again this week. 2,058 when we're kicking off the show here, up 59 handles, or about almost 3%, 2.95%. So gold catching a bid this week. Go figure, Fed spooking some people, spooking markets. Not exactly a mystery why gold is going back north of 2,000. A lot of people were maybe hoping for this last year. But I guess better late than never out there on the shiny stuff. In terms of paper, we are seeing a decently active week. Over 250,000 contracts on the tape, 266,000 to be precise. Of that, 41% going up in the June contract. That has about 21 days to go, so that's refreshing. Let's go hang out there for a change. I mean, 0 day is fun, but nice to talk about something with a little bit more meat on the bone as well. That June future, again, still hanging out 2058 right there. The vol, what is the vol in June gold right now? It's right around 17 3/4, up about 2.7 points. So, you know anything about gold vol? That's actually decently frothy for gold vol. You usually we'll see it hanging out at a 14, maybe even a 12 or below. So 17, almost 18, nothing to sneeze at out there in gold land from a vol perspective. The other thing, if you watch gold and most of the precious metals, you know that usually the bid is to the upside, the discount is to the downside from a skew perspective. And that's pretty much what we're seeing again this week. The puts last week, nobody wanted them, 4.4% cheap. This week, they are 1.6% cheap. So the puts have gotten less cheap, still cheap, but not quite as cheap, close to flat. And then the calls last week, 6.7% rich. So not surprising there was a bid in the calls heading into Fed week. This week we have rallied. We're seeing some of that call bid come in. Makes a perfect amount of sense, 3.5% bid. So still bid, but coming in a little bit. As you're rallying north, people are obviously dumping some of those calls that they bought, listeners, taking their profits. So you're going to see some of that upside call wing come in. That's pretty much what we're seeing out there this week. In terms of action, like I said, the lion's share was in June, 41.4%. So we're going to hang out there. And the most active contract was the June 2100. So we're hanging out close to 2060. June 2100s. Did you have that on your bingo card, listeners? Pretty active freaking contract. 26,000 of these things trading this week. The big day, Tuesday, not surprising, about 14,000 on the tape on Tuesday. 6,000 on Wednesday, 5,100 today, only 1,000 on Monday. So everybody obviously keeping their powder dry on Monday, waiting for the big announcements to come on Tuesday and Wednesday. So not exactly surprising there. Mostly opening earlier in the week, closing later on in the week. That's exactly what I was just saying earlier, listeners. People were putting on some upside calls earlier in the week, dumping them later in the week after they got their move. So again, not surprising that we're seeing that upside skew come in a little bit this week. Right behind it, we kind of have an embarrassment of riches, but it was really the 2100s are orders of magnitude busier than everything else. The next busiest contract, listeners, are the 20 halves, which are now in the money contracts. Those did a whopping 5,600 contracts. So from 26,000, we dropped down to 5,600. So all of the action this week was in the June 2100s. That was the place to be this week. But we'll make what we can with the rest. The 20 halves, actually the busiest day for them is today. 2,300 today, about 2,000 on Wednesday, 1,000 on Tuesday, a couple of hundred on Monday. It looks like opening all week long for those. So some folks were still opening on the 20 halves. Makes a little bit more sense. Remember, we are kind of vacillating around that 20 half strike before we blew through it. So intriguing stuff there. But yeah, all the oxygen in the room this week, listeners, was all out. All the action out there on the 2100s here in June. Let's see if we can find anything else to rival that. Sometimes if you go farther out, that is the case as well. No, everything else seems pretty even, pretty steady. 5,000, 5,000. The 2200s in June also trading this week as well. 5,500 of those bad boys. The big day for those was Wednesday, 2,700 going up. Again, mostly closing, so folks bailing on the 2200s. Actually, I take that back. The 2075s are trading on Wednesday 2,700 times. The 2200s traded 1,700 times on Wednesday, mostly closing, and then 3,200 times today. So that's interesting. A ton of 2200s in June going up today. Interesting. Would you be diving into those today, listeners? That's an intriguing strike. 2,200. We are barely north of 20 half. Not quite getting to 2,100. Would you be overwriting those? Would you be buying those? And if past is prologue for the shiny stuff, people are probably buying some upside. 2,200 by June expiration. Again, we've seen crazier things. We're up 59 handles this week, so we have seen crazier things. It can happen, but again, intriguing stuff. That does kind of dovetail with what we were just talking about on the option block show earlier. Someone putting on a sell 1 buy 2 ratio spread out there in the VIX. I think it was the September 40-60. Sell 1 of the 40s to buy 3, actually, of the 60s. So that's the kind of trade, if you know much about vol. They're looking for an explosion to the upside in vol. This type of trade, June gold at 2,200 would be something similar and probably not great for the economy to be playing out to make those 2,200s relevant out here. Let's keep scrolling. Let's go out to a little bit farther out. How about the D's 2400s? Those were also in play this week about 3,000 times, listeners. The big day for those was Monday. 2,000 on Monday. The rest kind of scattered throughout the week. Looks like someone was bailing on those on Monday. They got the heck out of Dodge right before that one. Interesting. How would you bail on your D's 2400s right before the announcement? Kind of why you have those on, right? Unless, of course, you were short to death and you were just spooked and you wanted to get the heck out of Dodge. Either way, a bit of a weird paper, but that's what we come to expect out here in the shiny stuff. Speaking of shiny stuff, I was just talking with our buddy, Mr. Uncle Mike, and it is on our movers and shakers this week at number 3. It's, of course, silver up 4.13% this week. So we're going to go out that metals drop down and go down 1 from gold to silver in the precious. And how much paper on gold versus silver? Gold obviously doing a little over 250,000 contracts. Silver, a little bit less, about 40,000 contracts on the tape. Still a pretty active metal, but obviously not much can hold a candle to gold in the metals complex. Silver right now, 26 1/3, up a little over a point, or about 4.3%, just since Monday's show. So obviously all that upside coming this week. Again, not a surprise. Where are we hanging out right now in terms of the action? 40% is in the June contract again. So June is where the action is in the metals right now, listeners. Very much a counterpoint to what we're seeing in the equities and other products that it's all front day, front week. They're going all the way out 21 days in silver and gold. Let's see, the vol right now in silver, 30 and about a third, up nearly 4 points. So silver, much frothier, much more turbulent than what we're seeing out there in gold. That's interesting. That's a decent amount of vol, certainly more than what we're seeing in equities. And it's right in the upper bound of that range that we talk about a lot on this show, the 20s to low 30s range that most of the products we're talking about are in. Silver, obviously hanging out near the upper portion of that range. Obviously, it's no nat gas. We'll get to that a little bit later. No crypto, but it's still a decently frothy product, all things considered. UI is kind of a similar deal to gold. Last week, the puts were cheap, 2% cheap. This week, they're literally exactly flat, so nobody really has any bias one way or the other on the puts this week. The calls last week, 5% bid. So again, the calls were bid going into this week. Makes a ton of sense. It's kind of the oldest playbook out there in the metals land. 2.2% bid this week. So obviously those calls coming in as we're seeing this rally out here. And in terms of action, the big dog out here in silver this week, I said we're hanging out at a 26.31. It's the 27 calls leading the charge with about 2,000 contracts on the tape. The big day was Wednesday, about 650, and then 300 and change every other day the rest of the week. Unlike gold, though, they were pretty much opening all week long, which is interesting and or unexpected. So intriguing stuff out there. And then we also have the 27 halves going up about 1,000 times. Again, all Wednesday and today, nothing earlier in the week. So intriguing stuff for silver. Let's look a little bit farther out to see if we see any other weird stuff. How about the 35s and D's? They went up a couple hundred times this week, listeners. So it's like a 35, 45 vertical actually going up today. A couple hundred times in silver. You like that, listeners? Silver, 35, 40. I'll have to make sure to tell that one to the uncleist of Mike's. I think he will get a chuckle out of that. It wasn't all calls all the time. If we go out to July, listeners, nearly 1,000 of the 25 half puts also going up this week. Most of that today, about 400 today, 300 Wednesday. The rest kind of scattered throughout the week. And opening all week long. So maybe some folks fading this rally. Maybe some folks drawing a bit of a line in the sand, trying to get some juice before silver continues its run. Either way, interesting opening paper there on the 25 half puts in July. All right, that's going to do it for the metals, listeners. Well, let's keep on rolling. Our dark side, listeners, is almost entirely dominated by energy. So I think we got to head out there next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, to the sticky stuff we go now, from the shiny stuff. Pop out of that drop down near the bottom of the list and go all the way up to the third from the top. That's energy. Then I think because it's one of our frequent offenders, we got to start in nat gas. Listen, this has been the story for the last few months. Obviously, we've talked about it with many of our guests, Carly, Dan. Most of them have just been amazed at the price action we've seen out there in nat gas, and we're seeing it again this week. Nat gas just cratering off 13.2% just since the start of the week. So they have really come for it. Of course, you extend it to our show last week, it's off about 9.5%. So once again, starting to threaten that two handle, about a 2.09 as we're kicking off the show, off about 32 cents on the week. So we were just talking about this with so many of our guests. That two handle seemed pretty safe. A lot of people thought that was kind of a line of demarcation you could draw and not really have too much risk. And yet we did see a ton of paper biased to the downside. People buying 2 puts, buying 1 3/4 puts, buying 1.5 puts. It seems like, at least for right now, the latter paper was the savvy paper. How much paper on the tape this week, listeners? 542,000 contracts on the tape. So a banger week here for nat gas. That's over 100,000 more than we usually expect this time of week. The folks are slinging some nat gas. And like the metals, all that action is in the front June contracts. Got about 21 days to go. We're going to hang out there as well. What's our vol in nat gas? We were just talking about silver vol looking decent at a low 30. Nat gas, pretty much 2x that, 65, 70, so almost 66. Actually off a little bit in that front contract, off about 2/3 of a point. But we go a little bit farther out in the term structure, about every other month is up a couple of points from a vol perspective. So kind of strange what we're seeing in the front month, but then again, that's where the lion's share of the paper was. So intriguing stuff. Skew-wise, another weird one. Puts last week, 2.5% bid, so a slight bid to the puts. And again, that's what we've seen for a while out here. Bids to the puts, discount to the calls, even though we were threatening a two-handle. Very head-scratching paper, head-scratching skew, head-scratching term structure, yet that's what we had week on week. Last week, 2.4% bid with the puts. This week, they're pretty much flat, about 0.3% bid. The calls last week, nobody really cared about them. They were 0.4% cheap. This week, I don't think I've ever seen this on the show before, 0.0. So literally flat. There is no bid to the 25 Delta calls in front month nat gas. Again, if I had told you, apropos of nothing else, listen, if I just told you nat gas threatening a two-handle at this time last year when we were threatening a 9 to 10 handle, and I said, oh, by the way, no one's going to give a crap about the 25 Delta calls. What action there is going to be all on the put side. You probably would have laughed me out of the room, and I wouldn't have blamed you. And yet, that's exactly where we find ourselves this week. In fact, the most active contract here, once again, that front contract, that June contract, 2 puts. 40,000 of these have traded this week. 13,000 today, 13,000 yesterday, 8,000 on Monday, 6,300 on Tuesday. Opening earlier in the week, closing later on this week. Again, makes sense. Some people maybe saw this sell-off coming, scooping up some puts, dumping them later on in the week. That makes a certain amount of sense. Either way, just the 2 puts, just tearing it up, listeners. People cannot get enough of these 2 puts. And then right behind it, that's not out of the money enough for your blood, listeners. The 1 3/4 puts doing about 22,000 contracts this week. Once again, the big day today, about 7,300 today, 6,400 on Wednesday, 4,000 on Tuesday, almost 4,000 on Monday. Again, opening all week long on those, so we haven't quite obviously hit that 1 3/4 level, so some folks obviously pile into those. Maybe some of that closing paper we saw on the 2 puts yesterday and today, maybe some of that rolling down to the 1 3/4 as well. And then not to be forgotten, the 1.5 puts in June. Almost 20,000 contracts, 19,100 contracts on the tape this week. Once again, banger day today, 7,700 contracts today, so maybe there's some vertical action there between the 1 3/4 and 1.5 puts because that volume for today lines up pretty nicely. Yesterday, we saw about 5,000 contracts on the tape, 4,300 on Monday, 2,200 on Tuesday. Slightly closing on Monday, so some folks may be bailing on the 1.5 puts on Monday, which is strange, unless you overwrote the heck out of them and you were just terrified and got the heck out of Dodge. Either way, weird stuff afoot, so it's pretty much a front month put strip here, listeners. 2 puts, 1 3/4 puts, and 1/2 puts, collectively doing over 80,000 contracts just in those 3, so. Yeah, sub 2 puts, or really 2 handle and below puts, doing the lion's share of the paper out here, listeners. Again, this is just crazy times. So many people have been talking about upside, maybe some opportunities for upside out here, and yet that is not the paper we're seeing out here. If you go out to July, it has about 54 days to go. Also, it's the puts, the 1.5 puts, doing about 15,000 contracts almost, 14,200 out there as well. The big day for those, the 1/2 puts in July. Again today, 10,200 contracts today. Today, a banger day for nat gas, at least to the downside, listeners. 2,200 on Tuesday, 1,500 on Wednesday, only a couple of hundred on Monday. So all that paper, most of it coming today. Just a explosion of put paper, and the 1/2 puts in July. So once again, looking at the downside here, listeners. July 1/2 puts. I don't have the premium here in front of me, but would you be a seller or a buyer of those just at that strike level right now? Intriguing question. Maybe that could be a good question of the week for next week out here, listeners. Got to dig to find some calls, listeners. They are there, but you got to dig for them. In particular, let's go back to June. The June 2 3/4 went up 14,100 times this week. So there was some action in those. Once again, today's the day. 8,800 going up today. 3,000 yesterday, 1,400 on Tuesday, about 1,000 on Monday. Opening all week long. Obviously, we don't know about today's paper, but there are 11,000 already open on this strike, so that could be closing today. But 2 3/4, why would you be, unless you were just giving up the ghost, why would you be closing your 2 3/4 calls now? But, wow, this is, again, just not the paper I expected, let's say, a month or so ago when we first started talking about this, but I've come to expect it now. Just a rash of sub-2 put paper whenever nat gas starts threatening these levels. And again, who can argue with them? Right now, it's working out. Let's go out to the 2/2. There's about 12,500 of those going up this week. The big day for those was actually Wednesday, 5,300 on Wednesday, 2,800 today, 3,800 on Tuesday, and about 400 on Monday. So opening paper on the 2.5 calls throughout the week as well. So opening upside all week long. Given how much we're seeing in the puts and given also the fact that the call wings and these things are flat to getting cheaper. Yeah, it looks like most of the call wings, September, July, all got cheaper this week. So you got to assume that people are overriding those calls. So yeah, that's the scenario we find ourselves in, listeners. People blasting away at calls, loading up on downside puts. At least for right now, you can't argue with that. It does seem to be working, even if it is just head scratching. If you want a little bit more, shall we say, optimistic paper, at least upside out of the money paper, let's fast forward all the way down to January of 2025. Where will we be in the markets in January 2020? Will we all be alive? Will some other calamity strike us by then? Who knows? The track record right now, not good. But Jan of 2025, somebody was coming to play in the 9 calls in Jan of 2025. In fact, it looks like we have a strip of 1,233 of the 9 calls going up in January, February, March, April, May, and June of 2025. 1,233 of each. And going up staccato throughout the week. 283 on Monday, 550 on Tuesday, 400 today, goose egg yesterday. There we go. 9 calls in 2025. This is just all over the place paper. It makes it fascinating. It's why we crunch the numbers at the end of the day, listeners. But where are you on nat gas right now? Are you joining the fade party? I mean, it's kind of hard to argue against it at this point, given the price action we've seen. Every bid we've seen in nat gas has been very short-lived. So perhaps that is the right way. Perhaps this is the way, as they say in The Mandalorian, is to the downside here in nat gas. Let's keep it in energy here. Let's go out to WTI as well. Obviously, another banger to the dark side this week, off 7.83%. So a lot of action in WTI. As interesting as it is to see a 2 handle being threatened in nat gas, we're back into a 60 handle in WTI. Don't tell the Saudis and the Russians. They were just conspiring to get us out of this range, right, listeners? Now, here we are right back in it. 68 and about a half when we kicked off the show. Off 8 1/3 handles, or over 10%, nearly 11%. Just this week. If you go back to the end of our show last week, we're off nearly 8%. So, yeah, that little production surprise that the Saudis and the Russians sprung on us, apparently not going to be enough to keep us north of the 70 handle, listeners. So, my goodness, 68 and change. Where are you in WTI right now, listeners? Are you looking at puts? Are you looking at calls? What are you slinging? Definitely folks are slinging WTI. 795,000 contracts. So closing in on 800,000 contracts already in WTI. That's pretty much 2x what we typically would expect at this time of week. So an action-packed week out here in WTI as well. And looks like about exactly a third, 33.4% going up in the June contract. Has about 13 days to go, so we can hang out there as well. What is the vol in June WTI, you might be asking? Probably a little bit frothier than it was this time last week, and that is the case. It's at about a 46 right now, up 11.25 points. So, yeah, WTI, another one of the products that manages to buck the trend. The range most everything is in is the low 20s to the low 30s, seeing about a 46 in the June vol in WTI right now, so busting out of that range pretty handily. It was right at the top of it last week and just blowing through it this week. In terms of skew, 10.8% bid were the puts last week. This week, they're still bid, 8.8%. So, again, we are seeing this aggressive sell-off, shocking to some. When you see that, you usually see those bids maybe maintain a little bit. If you got a little bit more orderly move to the downside, then people might be taking their puts off. Sometimes when the move is this shocking, they might want to hold on to their puts a little bit longer. We're not seeing the collapse of the put wing you might see you normally come down. To the calls, no real change there, which is interesting. Usually to the downside, you might see those calls get a little bit bid as the skew rotates, but not the case. 8.1% bid last week and about 8.7% bid this week. So slightly more, but nothing really to write home about at the end of the day. And where was the action? I said we're at a 68 and about a half right now, listeners. The action was kind of split between 2 months and 2 strikes. The number one most active contract were the June 65 puts, going up nearly 30,000 times. The big day for those yesterday, almost half of that, 14,500 going up yesterday, 7,000 today, 6,000 on Tuesday, about 1,300 on Monday. Looks like most of that was closing throughout the week. So again, 65 puts as we're charging towards that strike. Folks getting the heck out of Dodge. I mean, looking at the skew again here, the skew should collapse a little bit. So the fact that it's still remained relatively firm could be some folks buying back puts that they had shorted. Maybe they thought that Saudi-Russian deal gave them a nice, healthy line in the sand to right at 65, and now that we're threatening it, they were bailing them back. That could possibly be. A lot of action on that 65 put strike, though, out here this week. And again, closing, some folks getting the heck out of Dodge. Either that or they just had them on, they had the move they wanted, and they were bailing on those puts. But they were bailing on them. You might see the put wing collapse a little bit more than it did. Again, it was a surprise move, so some of that also maintaining that vol a little bit out there. Skew movements at the end of the day, sometimes a bit of voodoo baked into that. Right behind it, we also have the 75 calls in July. So did you have some July upside on your bingo card? Because they did about 27,500 contracts this week. The big day for those, actually Tuesday. Almost 20,000, 19,700 going up on Tuesday. Pretty much all that opening. 5,300 on Wednesday, again opening. 2,100 today and only a couple of hundred on Monday. So an explosion of upside call paper in July on the 75 strike. That's interesting. I did not have that on my bingo card. Let's go look at the skew out here and see. You know what? They got a little bit cheaper this week, 8.8% cheap. The calls, they were 7.1% cheap. So there could be some opening overriding being done out here. Again, it went up on Tuesday, so trying to catch that move before we really aggressively sell off out there. Just intriguing stuff. So closing action on 65 puts, and we have some interesting opening action on the 75 calls this week. Intriguing stuff. Let's go a little bit farther out. Let's go out to D's. How about the D's 90s? How do you feel about those, listeners? Somebody liked them to the tune of nearly 13,000 contracts going up this week. Mostly opening all week long. So folks were piling into the D's 90s this week. That's intriguing. And once again, not exactly a strike, I should say, I had on my bingo card. That future is at about a 68.85, so a little bit higher, but nothing substantial. Make the 90s that much more relevant out here, but a banger week for them. Almost 6,000 going up today. 3,700 on Wednesday, 2,800 on Tuesday, and about 600 on Monday. Again, opening all week long on the D's 90s. Some of the paper lines up on Wednesday. Looks like about 3,800 each of the 80s and 90s traded. So potentially there was a vertical, 80-90 call vertical going up then, opening on both legs. The rest of the week it doesn't really line. Oh, Monday it does, 600 and change on Monday. So yeah, just interesting paper here all over the place in WTI. How about the pars, listeners? The pars and Jan traded about 4,000 times this week. Almost all of that today, and all that, I guess, opening because only 2,000 are open on the strike. So got some opening paper on the Jan pars. I love these weeks. The paper kind of all over the place. Where are you falling right now on WTI, listeners? You know what? Not to be outdone, we also have some August double puts. August 55 puts going up this week, about 12,000 times. Again, today was the big day. 8,400 today, 3,700 on Wednesday. There's not much to speak of the rest of the week. Opening yesterday. Probably going to assume opening today on these double puts going up in August. So, again, another intriguing strike. 55 strike by August expiration. If we keep this pace up, listeners, we'll be there next week. But still, intriguing stuff. Kind of strikes and trades all across the board, which makes it fun, which makes a market, which is why we do the show at the end of the day. As we keep on rolling, we hit on metals. We hit on WTI. We hit on all the energy. We have been talking a lot of ags. I'll tell you what, it was a Fed week. Let's head on out to the rates next.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody, welcome to the wonderful world of rates. We had Eurodollars lighting up our upside, up 7.02%. But again, Eurodollars, a pale shadow of what it once was. And also that and SOFR, both very institutionally oriented products. Not really for the lion's share of you out there listening to this show. So instead, we're going to go out to a portion of the rates that I know a lot of you like to play, and at the very least keep an eye on. It's the 10-year. Again, we're going to go to that drop down. We're going to pop out of energy. We're going to go all the way down about 3 more slots to interest rates. Then in product family, U.S. rates, and scroll on down to the 10-year. It's about halfway down on the product to drop down, listeners. You'll see the 10-year right now, 116.145, listeners. So love the old decimal still coming back into play up there. Up about almost 1.1% on the week. How much paper? A decently active week, but actually not as active as we've seen the 10-year in the past. We've seen the 10-year do easily north of 2 million contracts in a week. It's pretty much right at that level right now, about almost 2 million, 1.98 million on the tape right now. Of that, almost exactly half, 47% going up in the June contract. Has about 22 days to go. So we're going to hang out there, listeners. What is the vol on the 10-year? Again, you don't come to the rates for vol, but that said, they are getting a nice little lift this week. They're trading right around 8.5 right now in that June contract. That's up 0.75 of a point. So that's a decent pop for Treasury vol out here. And in terms of the skew, again, not a huge skew beast, but let's see what we got out here nonetheless. Last week, the puts 4.8% cheap, so that's actually something. This week, still around that level, about 5.2% cheap. So the puts hanging out, getting slightly cheaper. The calls last week, everybody wanted the calls, 6.9% bid. So discount to the puts, bid to the calls, has that nice kind of commodity skew going on. This week, that bid has come in a bit, 3.8% bid for the calls this week. And in terms of action, again, even on a not blowing the doors off, but pretty steady week out there for the 10-year, we are seeing the 117 calls do more, almost 2x what we saw in the entire silver product today. So a little bit of action. 76,000 of the 116 halves. Actually, let's take it back. 78,500 of the 116 halves going up this week. The big day for those today, 43,000 today, so over half going up today. 13,000 on Wednesday, 11,500 on Tuesday, and 11,000 on Monday. Opening all week long on those 116 halves. So that's kind of interesting. I said we're hanging out at 116.145 right now, so we're threatening that 116 half level. We are within spitting distance of it, so not surprising we'll see folks opening for size on that particular strike. Right behind it, we have the 117s, 76, almost 77,000 of those bad boys. Looking at the paper here, looks like a lot of it lines up pretty nicely. So probably some action here and some rolls, some adjustments, some verticals. We have 35,000 of the 117s going up today versus 43,000 of the 116 halves, so pretty close there. 13,000 of the 117s yesterday, 13,000 of the 116 halves as well. Opening on both there. 16,000 of the 117s going up on Tuesday versus only 11,000 of the 116 halves, so a little bit extra paper on the 117s there, and about 11,000 each of the 116 halves and 117s on Monday. By the way, the 117s were closing on Monday and Tuesday, where it was opening all week long on the 116 half. So interesting stuff. Not sure why you'd roll down if you wanted to from the 117s to the 116 halves on Monday and Tuesday ahead of the event. You could have done that, though. It looks like some people did do that this week. So intriguing stuff out here. Right behind it, though, not to be left behind, we also had some put action this week. The 114 puts doing 73, almost 74,000. So again, you're talking a lot of paper just in these 3 contracts, listeners. The big day for those, though, not today, actually yesterday. 42,000 of these 114 puts. It's like folks were bailing on them for size yesterday. 12,000 on Monday, slightly opening there. 11,000 on Tuesday, 8,300 today. Looks like closing the rest of the week, so no joy for the puts post-Fed. And even looks like a little bit pre-Fed on Tuesday as well, so interesting. And then opening on Monday, again, not surprising there. Again, listeners, just an embarrassment of riches across the board. Look here really quickly, see if you see any other intriguing. 115 puts doing about 40,000 contracts. Big day for those. Also Wednesday, about 19,000 there. Let's go a little bit farther out. Let's go out to July, where we have the 112.5 puts leading the dance with 37,000 contracts. Once again, the big day for those today. About 16,000 today, 12,300 on Wednesday, 8,400 on Tuesday, a couple of hundred on Monday. It's like folks were bailing on those all week long. So no joy for the 112 half puts this week as well. A little bit of action on the 118s, though, in July, doing about 25,000 of those bad boys. Big day for those, actually Tuesday. So a little bit of early to pre-announcement Fed paper going on to position there ahead of the big announcement on Wednesday. About 1,000 on Monday, 2,800 on Wednesday. So some folks bailing on Wednesday, and then 2,700 today. So interesting paper kind of all across the board here in the 10 years. Are you a 10-year fan? How do you trade it? Do you like to trade directly with the futures and the options on futures? Do you do some of the ETFs that play in this space? A lot of different ways for you folks to carve up the rates space this week. All right, everybody, that is going to do it for TWIFO this week. Fun day here, a live show earlier this morning, a live audience show, I should say. Always fun to do those, catch up with those guys again. And then, of course, back in the studio, back in the mothership to keep the content feed flowing for all you pro folks on the live, as well as, of course, all you on-demand folks. We love you all equally out there at the end of the day. That is going to do it for our broadcast day today. Back again tomorrow, noon Central, 1 p.m. Eastern for Volatility Views. And after that, for all you pro folks with options oddities, got the Oracle of New Hampshire joining me for that one. Should be a good time. Of course, if you want to check out the pro stuff, theoptionsinsider.com/pro is the place to go to learn more. And you already know where to go to check out these fun reports for yourselves. Remember, they're active throughout the week, not just during showtime. So you can check the 10-year or Nat Gas or Rough Rice at 2 a.m. on a Saturday, whenever the mood strikes you. Just go to cmegroup.com/TWIFO. And we'll see you back here next week, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.